again, and today we dive into a concerning trend shaking up the mutual fund space. The SIP stoppage ratio has just shot through the roof, staggering nearly 300% in April. Now, that means for every new SIP started, almost three were stopped. And yes, you heard that right. It's a very huge number. As markets waver and investor sentiments turn cautious, many are pulling the plug on their monthly investments. But is this a smart move or a knee-jerk reaction to short-term volatility? And what should you be doing with your SIPs right now? Either to stick around because we will break it down for you further, the numbers, the trends and strategies you need to stay on top of your money game. I have with me Hemant, Rustagi, Vice Invest, and Arnav Pandya, founder Money Edu School. Good evening and welcome to the show. Hemant, let's just break down the data because we want to start with the basics. What exactly is the SIP stoppage ratio and how worrying is this 300% spike in April?
Kavita, I think this is an alarming number. There's no doubt about the fact, but I think we need to put this
Yeah.
number in a proper perspective. While you said, I agree that 300% obviously is a huge number and it's a little worrisome. There are two, three important things that we need to remember, Kavita, that what is the reason why investors stop their SIP? Obviously, one is, the recent volatility that we've seen in the market. So obviously, investors who have come into started investing maybe around 1 or 2 years ago, they obviously can be a little concerned about volatility in the performance of their portfolio. Then, of course, there are other reasons why investors stop their SIP. Is even on a show, many a time we talk about we've seen that investor investing in 50, 20 funds, and then we tell them to consolidate. So it could be a consolidation. It could be the term gets completed. If you're doing SIP for 3 year or 5 year, the term gets completed, then you restart. And there is always a time lag when you stop your SIP and when you restart the SIP. So they can be, the data will show you that, okay, you've stopped, but maybe the new SIP will come in the next month. Coming specifically to this 300%, I think the major reason for that, which I think MFI has also clarified, Kavita here, that they have been doing this reconciliation for the last couple of months. In fact, you see these numbers have been going up for the last few months. The reason being that, when you're registering your SIP, you could do it on the stock exchange platform, directly with the RTA. There are other sources also. I think SEBI had asked MFI to look at the dormant SIPs where no action has been taken. I think this is the result of that reconciliation. While I'm agreeing that these numbers have gone up, but they have gone up to this alarming level only because I think this is one-time exercise. And MFI has also clarified that they're expecting the numbers to become normal from the next month, because there are a couple of other things that we need to look at. Look, the average SIP ticket size has gone up to 2,912, which was 2,341 last year. So in the last 1 year, it has gone up by 24%. If you look at the contribution of SIP AUM to the overall equity AUM, that has gone up to 35.4. So I don't see that there is any reversal in the trend or rethinking on the part of investors or utility of SIP as a mechanism to build wealth over a period of time. I think these are the numbers. Yes, whenever the markets are volatile, the numbers will go up a bit up. But I think this alarming number is, according to what information I have, is mainly because of this one-time exercise, the cleaning up that was done.
Sure. Arnav, how do you read this in terms of an indication for a larger shift in investor confidence? Are we seeing panic withdrawals due to short-term market volatility? And what exactly does this indicate on the lines of investor confidence and understanding of the market?
No, so if I look at it very clearly, there is no sense of any kind of knee-jerk reaction by any investor whatsoever. Because, see, when you look at this whole figure in totality, look at it in the fact that you have to consider what are the new SIPs which are also starting, what is the amount which is coming in through the SIP. So if you look at it, say in March, 40 lakh new SIPs were started, that figure has actually gone up to 46 lakhs in April. Similarly, I mean, you see the amount coming in this, I think in April, it was 26,400 crore plus, which is an all-time high. So when you look at it in totality, it shows very clearly that investors are taking some action with respect to their portfolios, apart from the fact of that cleanup exercise which is going on. And here you might see several low ticket SIPs being stopped because either the investor is consolidating, or the other reason which I can also see a lot of investors doing is that whenever this kind of market churning and volatility happens, or when there is a fall, at some point of time, investors also look at the fact that they go back and see, do their review and see that, say, X fund is not doing well. And then if they think that they need to change, then they stop an SIP in one fund and maybe start it in another. So that is the key part, that if there was a situation where the money was being stopped from one SIP and it was not coming back to the mutual fund or not coming back to equity mutual funds, that would have been a problem. That as of now is not being reflected in the figures, because whatever churn is happening, the money is still going to equity mutual funds, and that too on a regular basis. So if you look at it over a period of time, in this entire 6 month period when the equity markets were in not in very good shape, the investor, the small investor, has remained invested, and he has continued to invest and allocate a part of their savings towards SIPs, and which is a good sign, which shows that there is no sort of worry, at least as far as the small investor is concerned.
Uh, Hemant, are first time or new investors more likely to stop SIPs when markets turn turbulent, or are we talking about smaller ticket SIP, that are being stopped? And also because people have this benefit of starting an SIP on just one click, if it's starting from one click, it's also stopping at one click. So is this because of that reason why people are investing through SIP and also stopping it? Are we talking when we talk about the new or first time investors?
So, Kavita, like I mentioned earlier, there'll always be some investors, maybe those who just started investing, they obviously invested. If you look at up to September last year, obviously they were investing at a higher level. Now they're investing at a lower level, but because the markets have fallen, okay, they may be seeing a negative return. So they can, get a little puzzled, perplexed as to, how to react to this. Then there are also investors who, sometimes do not, or in fact, most of the time, they don't invest with a clearly defined time horizon in their mind. Good thing is that over the years, what we have seen is, and that I think that reflects in the SIP book, which is a gross collection. If you see 26,632, which clearly means that the trend is very much intact. And good thing is that more and more investors are aligning their investment through SIP to their long-term goals. Now, the advantage of that is because you have clarity in terms of your time horizon, maybe 10 years, 15 years, 20 years, they are equipped to actually handle the volatility in a much better manner, because when you see that there is a volatility and you know that I still have so much time on hand, and the fact that I'm investing every month and I'm also stepping up my SIP every year, they have clearly understood that there is no point in panicking. I mean, markets, the volatility is a natural phenomenon for different reasons. The markets will keep going up and down. So I think most people are investors are following that discipline. Yes, I mean the ones who have started recently investing, they are the ones can get worried, and mainly it's those investors who have invested without a clearly defined time horizon are the ones who panic. And second, like we discussed earlier also, that there is always consolidation that happens. I gave example of, we have also been recommending investors that there's no point in having 15, 20, 25 SIP consolidated into 5. So obviously, let's not forget that we're talking about reduction in the number of accounts, not in the trend of how much money is coming. That money has gone up. As I mentioned earlier, the average SIP book size has also gone up. The contribution of SIP AM has gone up. So there is no change in the trend. It is likely that, or it is natural that a section of investors will get worried. And I think it depends again, if they've been investing through advisor or distributor, there is some kind of hand holding happens. Sometime when you're investing through the platforms, there is no direct interaction, investors can panic. And I think some of it that what is getting reflected in the numbers there.
Sure. Uh, so exactly. So Arnav, now talking about the numbers ahead now, where do you think are these investors reallocating their money? within SIPs or within equity. And if we talk about other fixed income instruments like fixed deposit or debt mutual funds, is there any interest growing there?
So there are two things here. One is that when you look at the overall trend, you can see that now with rates falling, and still investors do not find fixed deposits to be a very attractive form, and which is why you are seeing this entire reallocation on a larger scale happening in the country. So investors have now realized over a period of time that the traditional investments which they were doing, which is putting away all the extra funds straight into fixed deposits and hoping that this would meet their requirements, is not going to work. And which is where this entire goal setting process and all comes in. They have realized that having an exposure to equity is essential, and they have used the SIP mode to enter it through equity mutual fund. So that is one thing. The second is that still, while every investor portfolio needs an element of debt, the numbers which you see in terms of equity mutual funds are not reflected, or rather they are not being replicated on the debt side, because debt mutual funds are still a little bit complex for the lay investor to understand, and the behavior which they have. So a lot of people still just look at returns, but when you have a commensurate comparison which you are doing, you're supposed to look at debt mutual funds with the various comparative debt products and all. That at the moment, still investors are finding it hard to digest. So what has happened in equity has not been replicated in debt, and it will take some time. It's only sophisticated investors who are using hybrid debt and various multiple categories in their portfolio. But over a period of time, as more knowledge grows for mutual funds across the country, I mean, one should expect that more interest comes in from the retail side on the debt products also.
Um, Hemant sir, now should fund houses offer more defensive and no volatility SIP products to retain investors? Do you think as a strategy that's going to be of mainstream now, because we're already seeing a lot of low volatility products, catching up among investors also? I mean, investors are showing huge amount of interest in such products.
Well, I think, Kavita, the important thing to realize here is, like, while we all know that equity as a class is aggressive, the advantage of investing through SIP is that, you're averaging in a very disciplined manner. You're not trying to time the market. Okay, so you're investing in pre-decided funds on a pre-decided date. You're also increasing your amount, so you benefit from averaging. So I feel that despite the fact that investors who are investing through SIP in equity fund, they are able to reduce the impact of volatility. I mean, obviously, you can't eliminate that completely, but to a large extent, they're able to reduce the impact of volatility and also, in fact, benefit from that through averaging. While the funds that you mentioned have some utility, but I don't see that emerging as a trend. Maybe there will always be some investors who will look at these strategies because we have also seen earlier, like we have seen momentum fund, we have the high beta funds, right? Smart beta funds rather. We have seen how they have reacted when the markets have gone down. So I feel that it's mainly for the sophisticated investor who should be looking at that. If you keep your process simple, despite the fact that you're investing in equity, follow a disciplined approach, invest in well-diversified fund. I think the volatility in the market, which normally scares investors from equity, turns to your advantage because, as I mentioned earlier, you benefit from averaging. So I think that's what a common investor should continue doing.
Okay, one more question here, Arnav, that we really need to help our investor understand the benefit of doing an SIP. At this current juncture in the market, should one consider staggering their re-entry or increasing SIP in a correction phase?
So see, corrections will come and go. We do not know when they start, when they end, and there can be sudden reversal of trends also. So as an investor, do not worry too much about when you want to uh, put your SIP or when you want to start end it. When you have the money, you should be investing, and the earlier or the immediate time period with which you started, the better it is, because once the money starts getting allocated, at least your distribution in terms of the averaging process starts out. So do not wait for time periods when you have the money. Ensure that you have done your entire uh, goal setting process properly and then allocate and just start the investment. So keep it simple. And that is the best way in which you will be able to benefit, because it's only in hindsight at some later period when you will be able to analyze and say that this is when the fall started, this is when the fall stopped, or this is when the trend reversed, this is when maybe a second fall came, because things are changing at every possible moment and you don't know what new event might come up tomorrow. So keep investing, start investing as soon as possible. That's the simple way to go about.
All right, with that, Arnav, thank you so much for being on the show and helping our viewers with this very crucial topic. But then, Hemant, let's move on and let's get connected with our viewers. It's time to get our viewers' portfolio queries answered. And just in case you're watching the show live and want any help from our viewers, from our experts for your financial portfolio, you can send across your question or even WhatsApp us your queries on 86579974571. The email ID where you can send across your question is themoneyshow@etnow.tv. Hemant, let's begin and okay, let's take Priyanka's question. She has Canara Robeco Emerging Equity, SBI Small Cap, Nippon Multi Cap, and she will continue for 10 to 12 years. Present value of her portfolio investment is almost 25 lakhs. Any advice for correction or new investments? Her goal is 2 CR.
Well, I think let's look at the target first. Like you said, Priyanka is investing, for a time horizon of 12 years. See, the current corpus is around 25 lakh. And so I think that if she continues with this, the SIP is 21,000. Assuming annualized return of 12%, she can expect to build a corpus of 1.7. Since her target is 2 crore, she obviously will have to invest some additional amount, which is around 10,000 rupees. So if she can increase her SIP by 10,000, assuming 12% annualized return, I think she should be able to achieve her target of 2 crore. But of course, the key is that she will have to continue this process irrespective of the market condition. So if she can keep that discipline intact, I think I don't see any problem in her reaching her goal. Couple of funds, I think if you look at, she has chosen the right category. There's a large and mid-cap fund, which is Canara Robeco Emerging Equity. It's a great category because the fund invests 35% in both these segments and 30% at the discretion of the fund manager. It's a great category to have, but I think there are better funds in this category than Canara Robeco Emerging. And I believe that she should look at some other fund, maybe look at Invesco Large and Mid Cap. That's one of the funds she can consider. Then there is a small cap fund, which is SBI Small Cap Fund, where she's investing 6,000 rupees. And I believe again that there are better funds in the small cap category. Small cap can be a great category if you invest in the right proportion and you invest for a longer term. So maybe Bandhan small cap can be a good option. The third is Nippon Multi Cap. Again, as a category, it's great, and even Nippon as a fund has been doing very well. So I think 2 changes, and she can continue with Nippon Multi Cap, the original fund which is there in the portfolio.
All right. I have Ms. Rukmini on the phone line with me from Hyderabad. Hi, good evening. How are you doing today, ma'am?
Fine, madam. Fine.
All right. So you wish to invest somewhere better than a bank FD, and you're retired, it seems, as per the details that you've given us, and you want to make sure that your day-to-day needs and expenses are met, and you have no liabilities so far, which is a good thing. You would like to invest in mutual funds. Goal is capital preservation plus better returns, and you also want to know if it's a good time to invest in gold ETF. What's the amount that we are looking at over here, ma'am, and for how long are we talking about? What's going to be the investment horizon, time horizon?
Around 3 lakhs, madam. 3 lakhs.
3 lakhs.
3 lakhs.
Okay. And
3 to 5 years.
3 to 5 years. 3 lakhs for 3 to 5 years. Okay. Perfect. We'll just help you with that. Hemant, we have some clarity now. What should be the strategy?
Well, I think yes. I think this clarity definitely helps. I think what she mentioned about time horizon is 3 to 5 years, and the money that she wants to invest is 3 lakh. Considering the fact that she is looking to get better return than fixed deposit, I mean, she needs to, one, be aware of the attendant risk of investing in market-linked product, and the second is to have the right kind of asset allocation. In this case, I think there are 2 options that she can consider. One, because she also asked about whether she can invest in gold at these levels or not. Obviously, there is always a case for some investment in gold or silver. So, the best way to do that would be to invest some money in a multi-asset fund. Okay, the multi-asset fund invests in a minimum 3 asset classes, minimum 10% in each of these. So here I would recommend ICICI through a multi-asset fund. I think that can be a good addition. So she will get to invest in equity, debt, gold, silver, right? So I think that's a good option. And the second would be a balanced advantage fund. The balanced advantage fund also invests in equity, arbitrage, and debt. The allocation to equity changes along with the where the market levels are in terms of valuations. So I think there she can look at HDFC balanced advantage. She can, since the money is 3 lakhs, she can actually invest 1,50,000 each of these. She has a time horizon of 3 to 5 years. Like I mentioned earlier, there are some attendant risk of investing in equity, which means that there will be some amount of volatility. But of course, as an investor, if you're looking to get better return than fixed deposit, you have to be able to bear those bouts of volatility. And if you can do that, definitely you can expect better return than fixed deposits.
Okay. Rukmini ma'am, is there anything else you want to ask Hemant?
Thank you so much.
All the best. Hemant, let's take Mr. Rajapan's question. He has 70 lakhs fund. He's also retired, looking to invest for 5 years, and for that he wants an investment strategy.
Well, I think here again, the time horizon is 5 years, and he's retired. So if I consider these two factors, clearly the portfolio cannot be very aggressive. And I'm assuming that he's looking at mutual fund because he wants better return than traditional options. Of course, someone who's looking at no volatility or looking at steady return, taxation is not an issue. Obviously, fixed deposit can be a good option. But anyone who's looking to go beyond that, the mutual funds are a great option. I did mention about a couple of these categories: equity saving, balance advantage, multi-asset fund. In the right combination, can create the right balance between risk and reward, and obviously allow investors to get better returns. So in equity saving, there are two funds. One of these can be looked at: Invesco equity saving and Kotak equity saving. Now, equity saving as a category usually will invest 15-20% in equity and the rest in arbitrage and debt, in a manner that the overall allocation to arbitrage and equity is 65%. So you get the tax benefit of equity funds. So that's one option. The second is we talked about balance advantage fund. I did mention HDFC balance advantage. There is another one, ICICI balance advantage. One of these two can be looked at. And in the multi-asset, we discussed ICICI multi-asset, and another fund I would like to add is a White Oak multi-asset fund. So one of these two can be looked at. So I believe that in his case, it should be a combination of all three. Since he's looking to invest a large sum, my recommendation would be not to invest everything in one go, despite the fact that there will be controlled exposure to equity. Still, there is exposure to equity. So maybe around 40% or so can be invested as lump sum, and the rest systematically over the next 3 to 4 months. So that whatever volatility is there in the market currently and may continue for some time, you get benefit from that.
All right, let's take the last question of the show, which is from Krishna. And Nippon India large cap, small cap, HDFC flexi cap, multi cap from Franklin, HDFC mid cap, SBI Contra. And he wants you to check his mutual fund portfolio.
Well, I think the current investment is around 11,500. There is no mention of the time horizon. So I'm assuming that since it is an all equity kind of portfolio, that the intent is to invest for a longer period, which is something very, very important. The good thing is the money is being invested through SIP. So some kind of consolidation, maybe like he can continue with the Nippon India large cap 2,000, HDFC flexi cap 3,000, Nippon India small cap 2,000, and SBI Contra 2,000. And maybe then in the mid cap category, instead of looking at HDFC mid cap, you can look at Motilal Oswal mid cap, where 2,500 can be invested. So overall, 5 funds for 11,500.
Right. I think with that, it's a wrap on the show. Thank you so much, Hemant, for being on the show.